back to my YouTube channel. It's your girl Precious Malepo back with another video. As you can see by the title, I'm going to be working through a risk of material misstatements at assertion level question. I got this question off of Psycha's website, so it is a past ITC question, January 2023 to be exact. Before I jump into the information, I would just like us to look at how exactly they ask the required of such a question. So they say identify and describe the risks of material misstatement relating to the completeness, accuracy, and valuation and allocation of the creditor's balance of M4M as at 31st December 2022. So for this particular question, they actually tell you which assertions they want to see in your risk identification. But this is not always the case. Sometimes they'll just say identify the risk of material misstatement at assertion level. That would mean that you would need to cover all the assertions, being occurrence or existence, completeness, allocation, valuation, rights and obligations, as well as presentation and disclosure. So they've given us the exact assertions they want us to look at. Again, completeness, accuracy, valuation, and allocation of the creditor's balance. Furthermore, they say that for each of the risks identified, they want us to indicate which assertion the risk relates to. So we can't just write down the risk. We need to say, okay, this risk relates to this assertion. All right, let's jump into the information. So another thing that you might struggle with is deciding which information applies to that part of the question. So they ask for us to look at the risks of the creditor's balance. So you want to think what affects the creditor's balance. Creditor's balance is basically we have suppliers that we've purchased items from on credit that would make the creditor's balance. So you would probably agree with me that we're looking at the purchases cycle. However, looking at the background information assists us as well to understand the entity, to understand who works at the entity, what their roles are, etc., because it would be relevant to the cycle as well. You'll see later in a bit. So let's jump into the information. You are a third-year audit trainee working at the audit firm CFW Inc. In May 2022, CFW was appointed as the external auditor of Meals for Me Limited. Here, fourth M4M. So M4M has a 31st December year end. M4M was incorporated in 2017 by two brothers, Stephen and Michael Peters. So I'm going to highlight that in case their name comes up again. So they are the founders of M4M. M4M started off as a small business delivering frozen homemade meals. After the national lockdown, regulations were implemented from March 2020. The demand for frozen meals grew significantly. M4M subsequently expanded its range of frozen meals and now has distribution centers worldwide. All operations of M4M take place from their facilities in Bloemfontein. Meals are distributed from the central kitchen to the distribution centers and from the distribution centers to customers via a third-party courier company. Okay, so this is also important that they use that to a third-party courier company to get the products to their customers. M4M asked CFW to complete the financial audit by 28 February 2023. You're currently busy with the planning phase of the audit, which includes obtaining system descriptions from the various business cycles. They have been documented in the following audit work papers. So they gave us the system description of the accounting system, internal controls, as well as the purchases cycle. So the accounting system and internal controls. M4M uses an off-the-shelf accounting package, ACPROF. ACPROF processes value-added tax, has a built-in inventory management system, and offers the user a choice between perpetual and periodic inventory system. So you can see that this is relevant because we're looking at the purchases cycle. So M4M makes use of the periodic inventory system. So for those of you who don't know, the perpetual is basically when a company makes changes immediately. So once something is sold or once something is added to inventory, we're going to adjust the inventory numbers as the changes happen. Whereas a periodic system, where we would perform stock counts periodically, and that's when we would adjust the inventory numbers. Okay, so M4M makes use of the periodic inventory system. So they would basically have stock counts periodically whenever they decide. And that's when they would make changes or adjust the inventory balance. Free support is provided by the supplier of ACPROF for 5 hours per month, and changes to the system can only be made by the software developer. The finance function consists of the following individuals. So we have the financial controller, who is Sarah. We have the senior accountant, Temba, the accountant responsible for sales and tax, Amira. Then we have Zama, who's a second year part-time student in chartered accountancy. She was appointed in August 2021 to assist with managing the purchasing process and creditors. So we have a student helping with managing the purchasing process and creditors. Creditors balance, remember, is affected by purchases. So that's something that is important to the creditors balance. I'm going to highlight that. All right, then we jump into the purchases cycle. So the purchasing and receiving team consists of the following staff members. We have the head of purchasing, Lekwa. We have 10 buyers, 2 purchasing clerks, Victor and Prudence, and then 4 receiving clerks, Grace, Kagiso, Temba, and Nabela. So important master documents, we have the list of approved suppliers, and then we have the standard price list. When a new supplier is considered, Legwa presents the supplier's details to Stephen and Michael. Okay, so we said Legwa was the head of purchasing. So when a new supplier is considered, head of purchasing takes the details to the founders of the company for approval. The approved supplier and standard price list are updated once she receives approval from them. So M4M makes use of the three categories of suppliers. So the first category, we have fruit and vegetables. The 10 buyers visit and negotiate with local farmers twice per week to ensure better price and optimal quality of seasonal produce. If the required items are not available from the local farmers, it is sourced from retail stores at significantly higher prices. So we have some sort of price fluctuation that happens, and we negotiate prices twice per week. So you can agree with me that there's a whole lot of fluctuations in prices when it comes to the category 1 goods. All fruits and vegetables are paid for in cash. So this statement basically removes category 1 from impacting our creditors balance because it's paid for in cash. And remember, our creditors balance is now us purchasing goods on credit. So category 2, meat, grains, spices, sauces, dairy, and other ingredients. M4M has fixed contracts with suppliers. M4M negotiates the prices of products with its suppliers every month, and standard price lists are updated as soon as negotiations have been completed. So this is relevant because they didn't mention that it's paid for in cash, and so they didn't mention that it's paid for in cash, and they negotiate prices every month. So every month, the prices for these category 2 goods are changing. You would probably agree with me that this is a risk to our creditors balance. Let me just highlight it. Come on. Okay, that's the best we're getting. Category 3, packaging and logistics. So all packaging materials are imported from Beijing Pack Limited, a supplier based in China. In terms of the contract, Pack pays, okay, that's the company. So Pack, we're going to be referring to the supplier as Pack. So Pack pays the shipping costs on behalf of M4M when handling the goods, when handing the goods to the courier, and then adds the transport costs plus a 10% service fee to its invoices to M4M. Okay, so we have a foreign supplier, 1. This is an element of risk. We'll get into how and why. And then also there's funny things happening here of who is paying on behalf of what. So it's not straightforward, which is also a risk, but we'll get into that in a bit. Let's go further. Placing of orders. So the ordering function on ACPROF is password protected, and only Victor and Prudence have access to this module. So not everybody can place orders, only Victor and Prudence can. So let's see their ranking. So Victor is a purchasing clerk and Prudence is also a purchasing clerk. So they're doing their articles. Where was I? Okay, so to initiate an order, the purchasing clerk responsible for placing the relevant order, either Victor or Prudence, enters their username and password consisting of at least 8 characters. The same purchasing clerk then enters the supplier code, which is obtained from the list of approved suppliers. So once the supplier code has been entered into the system, a standard order form appears on the screen. The form includes standard details such as the supplier's email address, business phone number, physical address, and credit terms negotiated with the supplier. The relevant purchasing clerk compares the details with the list of approved suppliers. The purchasing clerk next selects the description of the items to be ordered from a pre-populated drop-down menu and types in the quality of goods of items to be ordered. The product code and price of the items are displayed automatically after the relevant item has been selected from the list. The responsible purchasing clerk then compares these particulars with the most recently updated standard price list. The total amount of the order is calculated automatically by the system, and the purchasing clerk reperforms the calculation to determine the total value of the order before releasing the order to the supplier by clicking the Confirm Order button. Victor pulls a report listing all orders with no matching goods received notes from ACPROF on a weekly basis and follows up on any outstanding orders. Okay, delivery of goods. So all items are delivered to a dedicated receiving area. When receiving category 2 and 3 items, 2 of the 4 receiving clerks compare the quantity and description of the physical products with the delivery note received from the supplier and the original order form. The same receiving clerk checks the quality of the products, after which one of them completes a good received note on ACPROF, indicating the quantity and description of the goods received. Both receiving clerks sign the form electronically by each clicking the signature button. The receiving clerk then moves the products into the storage area. Recording of purchases. All category 2 and 3 suppliers send their invoices directly to a dedicated M4M email address. Okay, so after now the orders are made, the goods are delivered, invoices are emailed to M4M's email address, right? Zama monitors this inbox and captures these invoices on ACPROF as they are received. Okay, so now Zama, remember she was the student who is working as well part-time. So she monitors this inbox to see which invoices come through. Once the supplies invoices are captured, purchase journal entries are automatically posted to the creditor's account in creditor's ledger. Okay, so now that happens automatically, and that the capturing happens automatically. But remember, the monitoring of which invoices are received is done. Zama does it. So that part is not automatic. So you can agree with me that there's a risk that arises there. What if she misses an invoice? So I'm going to highlight that. The creditors control account in the general ledger is then updated to reflect the total amount owed to each individual creditor. Prof automatically matches the invoice captured with the relevant goods received notes and order form on the system. Once these documents have been matched, the system flags it as ready to be paid. So you can see the invoice now needs to be matched with the goods received note. So this risk that we identified up there is now moving further with the matching to the goods received note. Payment of creditors. So monthly supplier statements are emailed to the same email address. So now the same email address that the suppliers send their invoices. And these statements are used to make payments to suppliers. Zama prepares monthly creditors reconciliations for all category 2 and 3 suppliers for this purpose by comparing the balance payable according to the supplier statement received with the outstanding balance according to the creditor's ledger as reflected on ACPROF. Remember, ACPROF automatically posts to the creditor's ledger when Zama finds the invoices and loads them onto ACPROF, and then ACPROF will raise journals and then takes them to the creditor's ledger. If Zama detects a difference, she investigates the matter and makes the appropriate adjustments to correct the creditor's balance on ACPROF. She also adds a note next to the reconciling item explaining how the difference was resolved. Temba reviews the reconciliation and queries unresolved differences with the suppliers. Let's just pause there for a bit. So you can see that Zama is responsible for all the work that happens with the payment of creditors. There's no other person that reviews her work for for the accuracy. So here they say that Temba reviews the reconciliation, but only to query unresolved differences with the suppliers. So he's not actually checking Zama's reconciliation or the calculation she performs there. He's just reviewing it so that he can see which unresolved differences he can raise with the suppliers. So you can see how this is a risk because from the beginning of the process, which is Zama looking for the invoices, to the posting of the journals, to the reconciliations performed, it's all Zama. So there's no segregation of duties over there, which is a risk. I'm just going to highlight this part to show that Zama performs those things. So on the last business day of every month, Sarah prepares electronic payments on M4M's banking website, and Stephen releases the payments after reviewing the supply statements and creditors' reconciliations. So again, payment is prepared on Zama's calculations, right? And Stephen here only reviews supplier statements to creditors reconciliation. So he's not again reviewing the reconciliation that Zama has performed. He's just comparing the reconciliation to the supplier statement, which is a risk. No one is checking Zama's calculations. No one is checking her work. After payments have been made, cash book journal entries are automatically posted to the creditor's account in the creditor's ledger and the cash book balance in the general ledger. So they asked us to look at accuracy. Let's see. They asked us to look at accuracy. They asked us to look at valuation and allocation as well as completeness. Okay. So let's start over here. So Zama is a second-year part-time student. This increases the risk that the work that she's doing is inaccurate because she's still a student. So this risk affects accuracy, valuation, and allocation, right? The fact that she's still a student, she doesn't have the expertise that are needed to perform or overlook or manage the purchasing process and the creditors. So that's our first risk. Then the second one is the fact that the category 2 goods have fluctuations in price. So they mentioned that the prices are negotiated every month. Now, this is a risk to the creditor's balance. How do we know that we've included the correct price in our costing? Therefore, there's a risk that the creditor's balance amount is incorrect. So this affects the assertion of accuracy. It also affects the assertion of valuation, because what if there's a new price that has been negotiated, however, that is not reflected on our creditor's balance? Then we go to category 3 items where they speak on the packaging and logistics, and they say that the supply is based in China. So now we're working with foreign currencies now. We're working with translations. We're also looking at import duties, etc. But before we get to the import duties, let's look at the foreign currency and translations. There's a risk that we are using the incorrect translation rates when converting the packaging materials to rands. That affects the valuation as well as the allocation of the creditor's balance. Because if we use the wrong translation rate, our valuation of our creditor's balance would be incorrect. Then we move on to the point where they say that PAC pays the shipping costs on behalf of M4M when handling the goods to the courier, and then adds the transport cost plus a 10% service fee. So now the transport cost is added to the supplier, which is different, right? We don't expect the transport cost to be added to the supplier. Usually there'll be like a third party that will transport the goods. So now the transport costs are actually added to the invoice of the supplier. This is a risk for valuation, because this is not very common. So there's a risk that maybe M4M will omit to add the transport cost when they are calculating how much they need to pay the packaging and logistics supplier. Therefore, valuation could be off. The allocation could also be off. Then there's also the 10% service fee. There's a risk now that the 10% service fee will not be recorded or calculated accurately, because if we don't have the transport cost amount, then the 10% service fee is going to be incorrect, because the 10% service fee is charged on the whole invoice, right? So the transport cost as well as the goods that M4M has purchased from this foreign supplier. So there's a risk that the 10% service fee will be incorrectly calculated on the invoice amount. So that would affect valuation, that would affect accuracy as well as allocation. Then on the note of our foreign supplier, we have import duties as well as those import VAT rates that we need to consider when we are purchasing from a foreign supplier. That involves complex calculations. So there's a risk that the creditor's balance will be incorrect because of those complicated calculations. This would affect our valuation, it would affect our accuracy, as well as our allocation of our creditor's balance. I hope this is making sense to you guys. Okay, then moving on. Placing of orders, I'm okay with that. I'm okay with that. Then we spoke about how there's invoices that are matched to the goods received notes. But now the invoices are identified by Zama. I think it's actually over here. The invoices are identified by Zama. Oh, yeah, yes, here I highlighted it. Invoices are identified by Zama on the inbox. So now there's a risk that there's going to be some invoices that she leaves out, right? Which would mean that the creditor's balance is incorrect. So it would affect the completeness of the creditor's balance, because there's a risk that she might not account for all the invoices that have been emailed to her, because it's such a manual exercise. Zama has to monitor the inbox and has to capture the invoices manually onto ACPROF, right? So there's a risk that she might forget one of these invoices, which affects the completeness of the creditor's balance. Then the invoices captured are matched automatically with the goods received note. So what if not all those invoices are captured by Zama? Then we have the goods received notes, but the invoices are not all captured. So now there's a mismatch over there. So let's just think, why are we doing this matching? So the invoice and the goods received note, we are basically seeing which goods have been received to the invoices that have been charged, so that we can process payment, they say. So if the invoices is not pulled through, the goods received notes are received, but there's no invoice to match it because Zama has missed it, then we're not going to process payment for all our suppliers, when in fact we should be processing payment for them. Therefore, completeness of the creditor's balance is affected because we have not processed payment for all the suppliers, even though we should have processed payment for all of the suppliers. And over here, we highlighted that Zama prepares the monthly creditors reconciliations. As I mentioned when I was reading through the information, she basically performs from invoice step, from the monitoring the email to monitoring the email for invoices, all the way to performing reconciliations to identify any differences between the supplier statements and the creditor's ledger. So there is no segregation of duties. So there's no reviewing of her work. Remember, we said that Timba reviews the recon so that he can see whether there's unresolved differences with those suppliers, but he doesn't review and recalculate her calculation. Very important. So the lack of segregation of duties increases the risk, which of creditor's balance, or there's a risk that the creditor's balance is incorrect because of the segregation of duties. So she might have omitted something, she might have stolen something, she might have put in a fake supplier, whatever the case. which affects the assertion accuracy, valuation, and allocation. Just remembered something on the foreign supplier, but we'll go back. We'll go back. Let me just move down. All right. Oh yeah, then we're done. So also, Timber reviews the reconciliation and queries unresolved differences with the suppliers. Okay, but are those unresolved differences, do we adjust the creditors balance? Because if we don't make adjustments to the creditors balance after querying unresolved differences, then it's going to affect our creditors balance. So now there's a risk that the creditors balance is incorrect because the unresolved differences are not resolved, are not, we're taking it further, we're resolving it. If it's resolved, we go back, we're adjusting it so they don't mention any adjustments made to that reconciliation. Which could affect the creditor's balance's accuracy. I want us to just go back to the foreign supplier. Very important. When you see a foreign supplier, you also should look at when control passes to the company. So because remember you get your special shipping terms that basically say, okay, maybe M4M gets control of the goods at the point where the goods are shipped from China, or M4M gets control of the goods at the time that the goods arrive in South Africa, whatever the case is. But those things increase the risk that we are recording inventory incorrectly. So we may be recognizing inventory before we actually gain control of it. Therefore, we could be paying suppliers too soon before we've gained that control. Therefore, our creditors balance could be incorrect in the sense that it is overstated. We have creditors amounts that have not even, like, we have no control of those goods yet anyway. So we shouldn't be accounting for those creditors yet. So accuracy of the creditors balance could be affected by that risk. All right, guys, let me think. Have I forgotten anything? But I hope this is making sense. Again, let the information guide you. As much as there might be repetitive things in the questions that you might come across. For example, the shipping, the whole translation differences, that affecting the creditor's balance, the whole thing of when does control pass, that affecting the creditor's balance is very repetitive. The segregation of duties, that's also a general one that you can always be on the lookout for because it's so common. But okay, general aside, really let the information guide you. Let the information guide you, and also look at what would affect our creditors' balance and look at that information. I know this is a tricky one to kind of get a hang of, but practice makes perfect. If you go into the exam calm and you read the information, try understand the information really well and ask yourself, how would this affect my creditors balance, or how would this affect the account that I'm looking into? Practice makes perfect though. So jump into ITC questions if you need to, or any other past papers that you can get your hands on, and do a whole lot of risk of material misstatement at a surgeon level. And you'll see how all these risks that are identified are triggered by the scenario. So relax, don't freak out when you see a risk of material misstatement at a surgeon level question. Just let the information guide you. I hope this video has helped you guys. Let me know if you have any other questions. Let me know if you have any particular technical topics you would like me to cover. Just drop a comment down below. I'll be happy to do that. You've got this, guys. All the best. Good luck.